Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1315A and today's date is June 25th, 2017 and the title of the episode is The Collapse Will Be Driven by a Credit Collapse? Has the date been set? Now, before I get started, I just want to make an announcement. Yesterday, I uploaded an interview with Wolf Richter. He breaks it down on what is going to happen to the economy and what the Fed is doing. All you need to do is go over to the X22 Report Spotlight YouTube channel. You'll see the video there. You can play it right there. Or you can come over to the X22Report.com site, scroll down a little bit, look over to your right-hand side. You can play the video right on the site. Or you can go to NewsSentinel.com. Same thing. Scroll down a little bit, look over to your right-hand side. You can play the video there. Or if you are on Steemit, you can go over to Steemit and you can listen to the video and watch the video on Steemit. Let's get into the economic collapse financial news. Now, there's a lot of talk out there about blockchain technology, about Bitcoin, Ethereum, and we can see at this point the central bank system, they do not like this technology because, first of all, it is completely decentralized. There's no real reason for the banking system. There's no one really there to control how the money flows from one area to another. Also, the creation of currency, we don't need the central bank. And we're going to start seeing articles come out how the blockchain, it's not reliable. We're going to see articles coming out from the banking system on how they don't like it. And as these articles continually come out, they're going to be developing something in the background. Now, we do know there are many different corporations like JP Morgan, Intel, Microsoft, even Visa. They're looking for blockchain technologists, programmers that can help them in their industry. And I think this is going to be a very big thing moving forward. Now, yes, this is like the dot-com type of scenario when we're in the early stages right now, and there's like 700 plus different types of coins out there. A lot of them are completely junk, but there are good ones out there that will add to what we have today. And going forward, I already know of certain individuals that are working on a blockchain type of technology that is hooked to precious metals. And we see already that this most likely will be the next phase, the evolution of currency. Blockchain may be hooked to an asset, and we can see this will make it very simple for everyone around the world, especially other countries where they don't trust their government, where they don't trust the banking system. This is a completely decentralized system, and no matter what happens, even if it's cyber attacked or whatever, it doesn't matter because these ledgers are kept on many different computers around the world, and they can be rebuilt. They're not just copied from one place to another. They all hold them simultaneously, and there are checks that are going on, and there's a way to rebuild these ledgers so you really never lose the information. And we can see that central banks, they are very, very worried about this, and I see already starting now, moving forward, we're going to see a lot of articles that are going to tell you how bad it is, how it's not good, how it's not great for the banking system, how the banks don't like it, and they're going to continually put it down. But we can see right now that this most likely is part of the reset of the system and where maybe currencies will be moving after the reset. Now, before that reset happens, we need to get rid of the system that we're in today. And we can see already that it's starting to completely break down and fall apart. And we see right now out in Italy, well, the banking crisis, it has reached a tipping point. The ECB together with the Italian government over the weekend, they are trying to resolve the problems in two zombie banks in Italy, and the ECB ordered these banks to be liquidated. Now, unlike Monte dei Paschi, they will not be bailed out primarily with public funds. Senior bondholders, depositors will be protected while shareholders and subordinate bondholders will lose their shirts. The good assets and the liabilities, such as deposits, will be transferred to a competing bank according to the rescue plan, which has been drawn up by the investment bank, the Rothschilds. Well, what they're going to do is they're going to take these funds and they're going to move them to another bank called Atlante. Now, they tried doing this before, and the Atlante won. That bank went belly up. So the government set up another one called Atlante 2, and that too ran out of money. So in addition to all of this, they are trying to move all these different assets away from the bad banks. And all they're doing is moving things from one bank to another, pretending that there's no problem. And what is happening is, as things start to break down, the EU kind of bends their own rules and laws, and they start doing things that are against their policies because they know the banking system's coming down. Now, at the beginning of June, the European Commission gave MPs a provisional green light to begin offloading 26 billion euros of bad loans onto the Atlante 2 fund, even though these two systems, they're in trouble. So if the transaction is completed by June 28th, 8.8 billion euros of public funds will be released to plug the MPs' gaping capital shortfall. The European Commission also agreed that all investors who bought the MP's junior bonds would be eligible for the taxpayer-funded refund. But two of the private investors, hedge funds Fortress and Elliott, they completely walked away from the negotiating table because they had a dispute over the sales terms, which likely means that even an 80% markdown of the MP's non-performing loans may not be enough to attract private investors. If they don't come back, Monte dei Paschi, the other banks, well, everything goes back to square one. Basically, what's happening is the banking system, it is breaking down right now. We see it out in Spain, we see it in Italy, and all they're doing is moving funds from one bad bank to another bad bank to another bad bank, looking for other creditors to bail out this system, and it is not working. This is why the EU right now is starting to bend their laws. And we can see at this point that things are definitely getting worse in the economy. The Biz is out there, the Bank of International Settlement. They put up a list of the 4 biggest threats facing the global economy. The first one, a significant rise in inflation could choke the expansion by forcing central banks to tighten policy more than expected. Well, we know a huge wave of inflation, it's about to hit the shores. And the reason why they're doing this, because they already know what's going to happen. Second, serious financial stress could materialize as financial cycles mature if their contraction phase were to turn into a more serious bust. This is what happened most spectacularly with the great financial crisis. Well, we know that this is going to definitely happen. Third, consumption might weaken under the weight of debt. Really? It's already weakening under the weight of debt. And investment might fail to take over as the main growth engine. There is no growth engine. Fourth, a rise in protectionism could challenge the open global economic order. Actually, what they're laying out here is everything that is happening already. It's been happening. They already know the next collapse is on its way. Actually, we've been collapsing for a very long time. And people for a very long time are saying, well, we've been looking at the economy. We're seeing it break down. Where's the collapse? Well, the economy has been collapsing. The only thing that's been keeping it alive is all this stimulus. It's one gigantic illusion. But if you open your eyes and you really look, you can see exactly what's happening. And the reason why we've been tracking all of this is to show it step by step on how this comes down. Because I'm going to tell you right now, the banks, the central banks, they're going to try to convince everyone that it just happened out of nowhere because of this policy or that policy. No, it has not. This is why we've been following it. So we could say, no, you're lying. This is the whole purpose of this. Now, lately, we've been seeing articles pop up in different publications like Business Insider, CNN, MSNBC Money, and we're starting to see articles that read, the next recession will probably start much like the last one. And what I'm seeing right now is all these articles that are coming out are saying that, ooh, maybe we're approaching a recession. How is it going to start? and they're building it up, saying that we're heading in this direction. Now, very interestingly, Goldman Sachs, Citi, Bank of America, they're all in agreement right now that the Fed is the cause of everyday recessions. They've tracked this, they looked into it, and at every recession, when the Fed starts to tighten, we end up in some type of downturn. And this is what we are seeing right now. And if we look at all of this, we can see back in 82, 87, 90, 94, 97, 2000, 2007, every time the Fed came in and they tightened, we ended up in some type of recession. Here we are once again. The Fed is tightening. They're getting ready to unwind, and we're going to be heading into this recession. Now, what's very interesting is that there's a lot of banks, like we mentioned, Citi, JP Morgan Chase, Bank of America, Goldman, and they're talking about their clients and how they're urging their clients to cash out now, go to cash, which is very interesting. And this hedge fund manager from One River Asset Management, he is taking the next step. He broke down what he thinks is going to happen in the economy. Now, we've been talking about this for a very long time. He is saying, and this individual is CIO Eric Peters, and he's saying that this next crash is going to start in the credit markets. And he also put a date. Now, they normally don't do this out in the corporate media. These hedge fund managers, they don't put dates on anything. They don't predict anything. But things are so bad right now. They know the economy is a complete illusion. I mean, your head has to be stuck in the sand not to understand what is going on here. So this individual, CIO Eric Peters, believes in the next 8 months, we're going to see the following. And at the end of these 8 months, everything starts to crash. Everything starts to collapse. As we can see, the Fed is hiking their rates. And he says they're going to do this to lean against inflation, which we're seeing right now. They're also going to reduce their balance sheet to dampen the growing financial instability, which they mentioned that they're going to start doing. They'll signal less about rates, which we already see because we see Fed Bullard is saying, listen, maybe we should hold back on rates and maybe we should look at what Trump is doing with his policies first to see how this all plays out and focus on unwinding the balance sheet. That we do see. And they're going to continue to unwind the balance sheet throughout September, moving to the rest of this year. Now, as inflation is softening, as the gap between the real economy and financial asset prices is widening, if they break the economy while doing this with rate hikes, everyone's going to blame the Fed, which we know because we can see already they're the ones who decided that the economy is fine. Let's start raising the rates and let's make the economy even better. But we know the opposite is happening because every time we see tightening, actually the economy goes the opposite direction and it falls into either a recession or a depression. So if they continue with the rate hikes, everyone's going to blame the Fed, and they don't want this to happen. This is why they're already holding back on the Fed rate hikes, because I think they already triggered the economy coming down. And we know going back to 2006 to 7, there was a certain point where they stopped the rate hikes and they started to bring down the rates. I think they're going to stall them right now, keep them frozen, and watch the economy at this point as they unwind their balance sheet. So he said the balance sheet reduction will start slowly and proceed for a few months without a noticeable impact. The Fed then will feel validated like everything they're doing is absolutely working and that they've been right all along. But when the global credit impulse reverses, it'll be a cascade and avalanche, and everything will start to fall apart, and we will see the main collapse Valentine's Day of 2018. Now, this is what he's predicting. This is what he is saying is going to happen. And if you listen to Wolf Richter, the interview that I had with Wolf, he pretty much lays out almost the same type of scenario. He really didn't put a date on it, but he says the same thing's going to happen. And if things don't go well, the entire economy is going to really completely fall apart. Now, Bill Holter, he's been saying that this whole thing's going to come down to credit, where credit's going to collapse. Now, we see this individual, Eric Peters, is saying, yes, this is going to start with a credit collapse. So we are seeing that these individuals are all in agreement, and we're already seeing the credit impulse. It is now negative. And if this continues and continually stays negative and gets worse and worse as time goes on, we know that we're going to have a credit problem. And we could see already for the last, 2 months or so, 2 to 3 months, the credit impulse has been negative. It's getting worse and worse as time goes on. And we also see the flattening yield curve, which will end up in an inverted yield curve, which is another problem. So we can see at this point, we are headed to that period where the entire system is breaking apart, and these individuals in these financial institutions, they're looking at it saying, yes, it is clear as day. We can see right now, we just don't know exactly when, except for this individual who put a date on it, saying that, yes, in the next 8 months, we're going to see things rapidly fall apart. This is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.